Hi, I'm Jared Brown, Aussie expat financial planner based here in Singapore. Thank you for tuning into the video today. What I'd like to share with you in this video is accessing equity in your Australian property and why you should be thinking about this right now, if not a few months ago. We've got interest rates rapidly rising in Australia. We've got property markets cooling right across the country. We've got serviceability rates on the increase and borrowing capacities dropping as well. All of this happening while the Aussie dollar is also falling. So what should you do about this? What can you consider? And what might the market look like in 12 months' time? Let's dive right in. So first and foremost, let's start with the basics. What is equity in your property? This is simply the difference between the value of your property and how much you owe the bank or your lender. So for example, if I own a property worth $1 million and I owe the bank $500,000, my equity is the other $500,000. That's the portion that I own. Now, with most lenders in Australia, you can't access that full $500,000. The majority of lenders, particularly for expats, will allow you to go to 80%. Now, if you're a doctor, engineer, accountant, often there are a number of lenders that will allow you to go to 90 or even 95%, but we'll keep this simple in this video and we'll just assume we can go to 80. So in that example I used earlier, I've got my $1 million property, I've got a $500,000 mortgage, and I know that I've got another $300,000 because that takes me to 80%, which is the $800,000 against my $1 million home, $1 million property, that I can potentially access as my equity. So let's have a look at how I might go about that, why I might go about that, and why I should be thinking about it right now. So firstly, how on earth do we access equity? What does this actually mean? How do I go about it? How do I even get started? Firstly, I would definitely recommend you speak with a mortgage broker here. Particularly when it comes to expat lending, it is a far more complex space than simply walking into your local branch and asking the bank for a loan. Now, when it comes to accessing equity, you can often do this in two key ways. One is to set up what they call an equity access loan or a line of credit. This means that if I've already got my $500,000 mortgage and I know that I can access another $300,000, I might set up a line of credit or equity access loan for that additional $300,000. And it works very similarly to a credit card without the exorbitant interest rates that apply. And basically by that I mean I only pay interest on any amounts that I draw down. So if I set up that line of credit for the $300,000, it's not actually costing me anything until I decide to draw some of that money to go and use it for further investment or whatever I deem appropriate. Your second option when it comes to accessing the equity is to increase the total loan balance. So if my current loan is $500,000, I'm going to change that to $800,000, and that additional $300,000 that I now have access to, I might decide to keep in my offset account, or I might decide to do something else with it. But in simple terms, I might decide to keep it in the offset until I decide what I'm going to do with it. Now, why would I go about this now? Why should I think about this now? And why might this get a lot more difficult in 6 months' time? Let's have a look at that. Now, I mentioned earlier, interest rates are rising and serviceability rates are rising. Now, a serviceability rate is the rate that the bank uses to determine if you can actually afford to borrow the money. So I'm seeking an additional $300,000. The bank has to be comfortable that I can afford to repay $800,000 worth of debt, both at the current rate and their serviceability rate. So that's basically the current rate plus their own buffer. Now, we've seen the cash rate in Australia lifted rapidly. We will probably get another increase in November. We are currently on the RBA announcement day in October on the Tuesday. So in about an hour or two, we'll probably get another increase, and that might be 0.25 or it might be 0.5%. But in simple terms, rates are going to continue to climb a little bit further. What that means is that the serviceability rate that the bank uses is also going to increase. And what is that going to mean for me? It's going to mean that I can borrow less money because that serviceability rate is now higher. To put this in perspective, if we go back to the start of 2022, when cash rates were at rock bottom, and now we're seeing cash rates at 2.5%, very close to 3% now, my borrowing capacity as an individual, whether an expat or resident, doesn't really matter, has dropped by between 25 and 30% amongst most lenders. Now, if rates continue to increase, my borrowing capacity may in fact drop even further over the next 6 months. And that is exactly why I highlight that it's important to think about this now, even if you have no intention of utilizing that equity for the next few years. Because once it's set up, in most cases, the bank or the lender can't take it away. And chances are when you want it, it might be a lot more difficult to get it. So speak with your broker, speak with your financial planner now, work out what your options look like, what your borrowing capacity looks like, if you should access equity, if you should continue to use that equity to expand your property portfolio, invest in shares, top up your super, whatever it may be, consider your options while those options are available to you. If you have any questions at all, drop me a note in the comments, reach out to me directly. I'd love to hear from you. Thank you very much for tuning into the video. Please like, subscribe to the channel, and I look forward to seeing you next time.